Hello, traders, and welcome in a new daily market analysis session brought to you by the market research team at OnePro. This is Mohammed Yaoud, the head of market research, and today we're going to have a look on the markets. What do we have on our economic agenda, and what do we expect not only during today, but let's have a medium-term outlook for the whole week. So basically, markets are still moving in a sideways range. Trading conditions are really tight, and we are having a lot of sideways ranges on the main currencies like the euro, the pound, as well as the commodities, in addition to the dollar index. So we pretty much haven't broken out the trading range for the previous week. However, the good thing is we will definitely have a breakout during this week because there is a lot of data that we will be looking for during this week, a lot of meetings by the central banks, and a lot to look for. So let's start by having a quick look on the economic agenda for this week, and then we will dive deep into the charts and have a look on the technical analysis real quick. So stay tuned. Starting with the economic agenda for today, we can see basically on Monday, the 30th of January, we pretty much have nothing to look for today. It's only a couple of things from the euro economy. We have the German GDP, the flash German GDP reading. Um, just a moment. We have the German reading for the GDP today. It's the flash reading or the first reading for the quarter, basically the last quarter of 2022. We have the unemployment rate and some data from the Japanese economy by today's, or basically should be tomorrow's HN session for Tuesday. And that's all that we need to look for today's economic agenda. Nothing to look for, nothing expected to drive any higher volatility than usual. And as we all know, Mondays are usually calm trading days. So by the beginning of the week, traders usually look for some decision from the major sessions. I mean, the European session and the US session. So normally the first sessions during the week are very calm, and we don't have that big moves expected during today. In addition to the economic agenda, we do really believe that today should be a little bit boring in markets. Um, Going forward and having a look on tomorrow's economic agenda, which is the 31st of January, of course, it should be the end of the month. And in addition to a very few things that we will be looking for on the economic agenda, which includes the GDP for the Canadian economy. This is the top thing I'll be looking for during tomorrow, as well as the consumer confidence or the CB consumer confidence for the US economy. Although those are the top things I'll be watching for tomorrow, it is still not big enough for markets to move. Starting on Wednesday, the 1st of February, it should be a new trading month or a new month. And basically, we are expecting a lot of data and a lot of events, risk events to kick in the markets and, of course, cause this volatility or a big spike or breakout of the recent sideways range that we were looking for since the last week. Of course, on the 1st of February, we'll be having the FOMC statement and the federal interest rate decision, the FOMC meeting, and it should be concluded by the press conference. So far, markets are basically pricing in with around 98% probability that the Federal Reserve will hike interest rates with 25 basis points during the next meeting, which is the day after tomorrow. So this is basically something we should look for. And in addition to that, we will be having the ADP non-farm employment change. I don't really believe that markets will be paying any big attention to those numbers on Wednesday because we will be having the NFP on Friday. Next Friday should be the 3rd of February, which is basically the first Friday in February. So we are expecting the NFP numbers to be announced. And this is the number 2 risk event during this week. On Thursday, the 2nd of February, we have another 2 major central bank meetings from the ECB and from the Bank of England monetary policy report. So during this week, we are expecting the Federal Reserve, we are expecting Bank of England, and we are expecting the European Central Bank all to announce the interest rate decisions. This is an interesting week, which should start kicking in basically on Wednesday with the Federal Reserve, on Thursday, ECB and BOE, and we end the week with the NFP numbers on Friday. So in case markets still are stuck in the sideways range during today and tomorrow's trading days, which is highly expected, it should definitely come to a breakout starting on Wednesday. So that's for the economic agenda for now. Let's have a quick look on the technical analysis and let's draw some scenarios of what are the possible or the highly probable moves that should occur not only during today but during this week. Let's have a look. Starting with the dollar index here, we are still basically trading in this weak move on the 1 hour time frame. It is a descending triangle. We basically tried to break to the upside by the beginning or by the announcement of the GDP numbers, the US GDP numbers on Friday. However, as soon as we just broke above those levels, we broke. However, we failed to open and close a whole candle above those levels, and back we go again inside of the sideways range. So during today's trading on the very short term, and although it's a low probability scenario, I do believe that we might be targeting the levels of 102.20 or roughly 102.18, which is the previous resistance, and I'll tell you why. We have been having this mm, sort of higher lows and equal highs. So this is how it's been going. And the last thing we had is basically a higher low. And then we expect a move to the upside to target the 102.20. This is something I'll be looking for during today's trading day, after which from here I'll be looking for um, a short move or a move to the downside back again to the key support 101.80. This is something basically, it's not a high probability scenario because markets, um, I expect markets shouldn't go up or shouldn't go down. We might have this sideways range extension during today's trading day. However, on the 4 hour time frame, this is a clear bottom formation to me. So if you're talking about the Federal Reserve, expectations of federal funds rates during this week, as well as the NFP numbers, this is a brilliant move to the downside on dollar. However, since let's say mid-January, the dollar index has been doing pretty much nothing. We have been moving in a tight, very tight sideways range, just around the key support 101, or just above the 101 levels. So from here, I personally believe on the medium term, we will be having a move to the upside. I'm waiting for this move to happen during this week. However, it might be on the second part of the week or the second half. So starting maybe on Wednesday and Thursday, we might start to see this upward move play out on the US dollar index. Until then, the dollar index is expected to move in a very weak performance, just around the same levels. The euro is as well the same, however, on the opposite side. And you can see also on the 4 hour time frame, what's happening here on the 4 hour is basically another top formation because we're having a bottom formation on the dollar. So this is a top formation here on the euro versus the US dollar. We are trying to find the top here with a momentum that's decreasing here. So we expect a move to the downside to play out during this week. However, on the short time frame, maybe if you're going to trade the 1 hour time frame, so we're having a series of higher highs and higher lows, a series of equal highs and equal lows. Yeah, this is a sideways range. This is what I'm talking about. So two equal highs around the levels of 1.0920 and two equal lows around 1.0840. It's a range of around 80 pips, something pretty much interesting to trade. On the short term during today, if we basically targeted the support again or the resistance, we will be looking to trade this sideways range one more time. Just a moment and I'll be back with you. So on the short term, the euro is trading in a sideways range. The resistance is around 1.0920 and the support is around 1.0840. We will be trading in and out, buy low and sell high on the euro versus the dollar until anything emerges new in the market, and we'll see how it goes. The pound is basically as well in a sideways range, however, a poor sideways range. We have the resistance around 1.2415 and the support around 1.2350. If during the day, basically, we targeted the levels of 2350, only then we can have a long entry on the short, very short time frame. The dollar versus the Japanese yen is as well a sideways range. However, this might look as kind of symmetrical triangle, or what we call as isosceles triangle. So we are having a series of lower highs and higher lows. We do expect that the movement on the dollar yen to contract a little bit during the day. So pretty much no entries here or no expected move. However, on the dollar yen, by the way, on the daily time frame, we still also expect a move to the upside. And it seems to me here that the dollar yen is really trying to break above this downward trend line. Is it a channel or not? I do believe it might turn out as a channel. Yes, it is a price channel. Any upward break, which might take place during this week, would be a very good um, long term, or let's say medium term, buy position on the dollar versus the Japanese yen. The dollar CAD is pretty much doing nothing. However, we will be waiting for a break above the 1.3346. This is a great upward move. As soon as we have any higher high, this is a clear resistance here. So a break above should form a new higher high. And as soon as we finish the retracement, we might be heading higher on the dollar CAD to the 1.3430 on the short term. During Friday, we had a look on the euro versus Canadian, pretty much still doing nothing. We are having this sideways or this corrective move. After this corrective move, we might short the euro CAD. The pound Canadian basically reached our first target to the levels of 1.6450. A retracement here is due. After the retracement, short back again on the long term. Pound versus the Australian dollar is just nearing around the previously mentioned resistance, 1.7495, or let's tweak this level a little bit. Should be 75, I believe. This is the resistance we're currently trading below. From here, any signs of bearish price action should be a short entry on the short term. The Canadian versus the Japanese yen is basically respecting the upward trend line that we're having inside this ascending triangle. So I believe another higher move of 45 pips is something that I'll be looking for on the Canadian yen to target the 97.80 levels. Australian Canadian, or the Australian versus the Canadian dollar, is having this sort of bottom formation here. It's trying to find the bottom around the support levels 0.9440 with a clear bullish divergence, a good entry here of around, let's say, 40 pips during the day is something I will be looking for. And let's end this with the gold trading, which is still pretty much doing nothing, trading just around the support 1920. On the short or on the medium term, I'll be looking for a break below the 1920 levels to target the 1870. The first one should be the 1900, and the second target should be the 1870 roughly. So this is a move that I'll be looking for during this week. However, I really prefer to wait for a break below this cluster of support, which is currently trading around. So a break below 1920, we target the 1900, and the following is 1870. This is something I'll be looking for on the short term on gold, and let's see how this plays out during this week. So it's basically a good week to start with. Markets are still in the sideways range. However, it is expected that we finally break out this sideways range during this week. We have many risk events, as we agreed, the Federal Reserve, the ECB, and the Bank of England, in addition to the NFP numbers, such a combination that we not always see in one trading week. It's also the end of January and the beginning of a new month, February. So this week is interesting. This week we will have some good movements. We are just waiting for the volatility to kick in. Maybe I believe tomorrow or on Wednesday. So that was all for today's daily market analysis session. Thank you so much for watching this. We'll meet up again tomorrow at the same time. Thank you for watching, and please stay safe.